Thank you, Longbing, for the introduction. It's a pleasure and honor to be part of this panel on AI in FinTech at the plenary session of IJCAI 20. I thought I'd start by sharing with you a quick presentation to give my views on some of the thoughts I've had on the topic. I'm here to talk about the field in general, both my exposure to it, being part of the financial services world, as well as being kind of an expert and applied AI person through my company Open Insights, as well as through my new role at the Institute of Experiential AI, where I'm the executive director of that institute. I'd like to start out by basically saying, look, this is something we all know. Digital transformation has changed a lot of things, especially very recently, and it has transformed many fields. My favorite example is accounting, where if you think about accounting of 60 years ago, it was all about having big ledgers, having a good handwriting and good arithmetic skills. Today, it's a completely different kind of job where software does most of the bookkeeping, and the humans kind of operate at the accountant at a much higher level that is both much higher value add. And by the way, did that replace accountants? Not at all. We have a lot more accountants today than we did back then, but they're doing much more strategic tasks. There were good and unintended consequences of digitization. People, when they do digitization, they focus on workflow. How can they make workflow more efficient? But what they lose in the process, something that they had organically through these human interactions, is an understanding of the customer. Is the customer happy? Are they getting the products they want? Why are they leaving us? Where are they going to? What makes them unhappy and what is delighting them? So the question here is, can we restore that intimacy to the digital channel, which is a big question for financial services and FinTech in general. Just to give you a quick idea, here's a journey of a customer of a bank. Kelly deposits money into her account. Kelly has good standing with the bank. Usually that's the end of the story. However, reality is we have so much data through interactions with Kelly as a bank. We should be able to know that Kelly has a student debt, Kelly has just gotten married, and Kelly is saving to buy a house. That's one of her goals. So the real offer that would make sense in this case and is high value add to Kelly and to the bank is a refinancing of her student debt or a loan to Kelly to help her approach her goal of getting a house. Much of finance digitalization, as I mentioned, has focused on the workflows, little advanced on the customer experience and interactions and understanding them. There's many parts of a financial institution which opens up the gates for FinTech to contribute in big ways. The front office, you need to inject some human intelligence understanding in customer interactions, like what is the context of the customer, what is their intent, can we reduce the cost of customer service by understanding what they want and offer them meaningful service instead of something that takes up their time and is viewed as overhead. Can we cross-sell, upsell, reactivate, next best action, and do it meaningfully and at scale? On the back office, this is still very expensive and complex, needs intelligent automation in many ways. Functions that are very expensive, compliance, financial crime, operations, on data, etc. And I'm also skipping kind of the middle office here, lumping it with the back office, but also going beyond the human servicing capability, right? For example, if you had a step counter in a digital app, in a mobile app that they can use for for tracking things like safe driving or health habits, which result in discounts to the customer, and the customer is eager to kind of participate and opt in actively to get those discounts. Leveraging the network, social and otherwise, to embed financial transactions in that workflow of networks, right? Be it a Facebook or a Instagram or any of these things that can easily be made commercial seamlessly and need FinTech services, which need an understanding and AI. This is a redefinition of how we think of financial services, right? Payments taking it to the micro payments, dealing with cryptocurrencies, contracts, redefining how financial services fit into the new digital economy. There are so many contributions to help with contracting, to help with verification, identity, all of that. Accounting and bookkeeping, of course, insurance being reinvented as kind of microtransactions and used by the drink. Instant everywhere, so make latency disappear so that you can give answers quickly, credit approvals quickly, be transparent about where something is in a process. And it's a whole new area of new micro contracts and transactions. And finally, refactoring of banking itself. I'm calling here is banking as a service, right? You break it down into microservices, and then people use different aspects of banking, whether you're a large company, you're a merchant, you're a small company, you're a consumer, etc. And that refactoring is very important. That opens up all sorts of room for AI to contribute in a meaningful way, primarily to understand context, tracking and servicing, new payments mechanism, especially micropayments, and when do they apply and how do they apply. Financial advisory has seen a huge revolution in fintech contributions to basically democratizing access. You don't have to be a billionaire or have 100 million before somebody gives you attention. If a lot of this know-how and advice can be coded in an agent, in a chatbot, or in effectively an AI partner that really understands what's going on and really gives valuable advice. Those are, of course, big challenges. Modeling risk and future scenarios better suited for algorithms, as long as the algos are fair and responsible. So new ways of scoring risk. You can, banks today don't lend to a lot of people who qualify, and they end up going to other places like micro lending, etc., where they pay huge interest rates and they have much lower risk than the banks think. So leveraging all that available information, like simple stuff. Does my bank even know what's happening with me on LinkedIn? Most of the time, the answer is no. And you'd think that's very relevant, right? And finally, better understanding of behavioral data. Scale is a must, of course. AI algorithms are only feasible approach when you're trying to do understanding of context and customer, and you're trying to do it at scale. Complexity of products requires reasoning. So understanding kind of what the customer is going through, what they're trying to get done, their intent. And multiple ways, of course, of recognizing identity through triangulation, biometrics, vision, all sorts of stuff. New capabilities, technology and network require automation. And we talked about some of these things. Another issue I'll bring up here under challenges is the fairness and bias in algorithms. These can have big consequences. Financial decisions are much more consequential than targeting ads. So you can't have kind of inaccuracies that you do with ad targeting according to behavioral. Algorithms have little common sense reasoning today. So embedding them with a little bit of ability to kind of do some reasoning and to call for human intervention in the right context makes a lot of sense. And finally, modeling complex decisions and consequences is still a hard problem that we need to leverage AI technology to help make that more intelligent in machines. Advances in tech and data enabled potentially deep intrusion of privacy and civil rights. So it's something to really think about. Successful AI is heavily dependent on machine learning and data science, primarily because we don't have a lot of algorithms, we have a lot of data. And just collecting that data and making it available for use by the algorithms has proven to be a big challenge. Data manipulation is also not straightforward when you're collecting a lot of data. I call that the big wave here, right? You go digital, you now have 100x the data flux. What do you do with it? And how do you cope with the new economy of interactions and with rich and unstructured data in a world that comes from highly structured? In fact, 90% of data in any organization is unstructured, according to Gartner. And in my opinion, that number is only growing. So without the proper data, AI cannot work. Machine learning needs high quality and granular training data, not just analytics, not just BI. And that's why a lot of these approaches to big data have been failing. I love the quote by my friend Peter Norvig at Google: "We don't have better algorithms, we just have more data." that pretty much describes the state of the art in machine learning. So leveraging that data becomes really critical. I'd like to conclude this quick introduction to kind of ask, are you thinking about the big picture? Do you have a unified view of your customer, which is a customer 360 or a product 360 or a service 360? Do you have the context of your customer interactions? Do you understand their intent? Can you provide the data-driven, personalized offers? And is data access democratized, secure, enabling easy analytics, which will then enable AI that works? And hence, it's very important to kind of go after that and not forget about it. Here's my contact information. Feel free to contact me with questions, etc. And of course, I look forward to answering the questions on the panel. With that, I hope this introduction was useful in kind of setting the context, and I look forward to the panel questions and interactions. Thank you.